it's me here with your daily London session wrap. Well, it's been another very busy day in the markets. Lots of economic data out, including from Germany, from the UK, and also US durable goods orders as well. But the biggest mover today has got to be the euro, which is down across the board. We've seen euro selling throughout the entire day. It's been relentless. And we saw this at the start of the week, this sort of move where the euro was at one point trading above 1.10 against the dollar. And now it's just broken through the 1.9600 level, down almost 200 pips in 2 days. Now, we are seeing some profit taking coming into play here because the euro is now at the lower end of its range that we've been consolidating for the last couple of weeks between 1.09 and 1.10. So it's natural to see some profit taking come in after such a big rally. But the catalyst for that move lower today has been comments from the EU and from France in particular about the Russia-Ukraine peace deal. Now we had the EU foreign policy chief saying yesterday that there's been no progress on a peace deal between Russia and Ukraine. And that was music to the ears of traders who have been selling the euro, because if there's no peace deal, then we could see further sanctions come into play from the EU and the USA. We've already seen the G7 agree to phase out Russian oil over the next 6 months. We've seen the G7 agree to a price cap on Russian oil. And we're now starting to see the EU agree to these things as well. And that is why the euro is falling, because if there's more sanctions, then this is going to hurt the EU economy more than it's going to hurt the Russian economy. And when we look at the euro chart, what we can see is that the euro is now back to where it started the year. It's back to levels not seen since January this year. Now it's been a long road to get here. If we go back and look at the highs of the year, the euro hit 1.1360, so a full 80 pips higher than where it is currently trading. But what we can see is that those highs back in April, those highs back in May, they were all rejected. And ultimately, the euro has trended lower throughout the year. So, what's next for the euro? Well, I think the immediate support level to watch is going to be that 0.96 level, that 1.9600 level. That has been a very important level of support in previous years. So, I think we could see the euro find some support there. But if it does break lower, then I think the next level to watch would be the lows of last year coming in at around 1.05. That is still a way away, but it is certainly a possibility. So in terms of key data releases tomorrow, we have the US GDP data. It's going to be interesting to see what that comes in at. The market is expecting a strong print, so if that does come in strong, then we could see the dollar rally further. That's it for today. Thank you for watching. Don't forget to hit the like button. I'll see you tomorrow.